Coming up in today's video, stocks are mixed, gold is modestly higher, Bitcoin is stumbling again, and the dollar index is really threatening this level of support around 107.7. Let's jump in. This morning, we got the producer price index year-over-year number, which came in higher than expected at 3.5% compared to the forecasted 3.2%. And guys, this follows yesterday's hotter than expected CPI report, confirming that inflation wasn't just a blip on Wednesday. It in fact is a actual stubborn problem that the market is dealing with. Here's just a recap of where we are with inflation. CPI, again, hitting a 3% level. That is a 3 handle for the first time. By the way, going back since the previous time we saw that was July of last year. So inflation has had a bit of a reversal here where inflation was cooling and is now rising, confirmed by today's PPI numbers. So you might be wondering, if inflation is hot, why is the dollar lower? And this is again why I continuously reiterate on my channel just how important it is to understand the full picture of the macro environment that you're in. Yes, inflation data is coming in a little higher than expected, but we're losing the story in other places. Let me show you. So when we take a look at the US economic heat map within the Edge Finder, which helps us to source this stuff as a kind of collective rather than individually, we can see a lot of our readings are coming in red in terms of the change. Now, all this is showing you is that relative to analyst forecasts, the actual numbers came in lighter than expected. Lighter than expected. Retail sales, lighter than expected. CPI came in hotter than expected, red because again, it is hotter than expected. 0.2 for year-over-year CPI. Ignore PPI, this is not yet updated, but when it does, this will also be red. So you're seeing a lot of red here overall. And so I think that this threatens some of the dollar bullishness. It's like, okay, if the Fed sees weakening jobs data and growth data, perhaps it is still possible that we see rate cuts for a different reason than we thought. Maybe it's not inflation cooling, maybe it's inflation sticky plus poor growth. In fact, we have an environment for that. Let's zoom in over here and take a look at what that type of environment is. When growth and inflation are down and up respectively, which I would say we're not necessarily in a negative growth environment, but in an environment where they're missing forecasts, there's a possibility that we are leaning more towards a stagflation type environment. And a stagflation environment is not fun. That's an environment where there's not a lot of hiring, there's potentially even layoffs going on, and prices are still stubbornly rising. Also, if you'd like to try out the Edge Finder for 30 days, there's a link in the description down below to apply for a trial of the tool. This will give you the opportunity to play around with it and see if it's a right fit for you. You'll also be connected with a real person on our staff who will walk you through the tool during your trial. Our trials are not free, just a heads up. They're $199 for 30 days access to the tool, and that basically gives our team the opportunity to spend some time, dedicate some resources to getting you set up with the tool and making sure you fully understand how it functions. If that's something that you're interested in, please apply using the link in the description or pinned comment down below. And while I wouldn't say necessarily that we're in a stagflation environment at this time, the increased risk of that becoming the scenario is definitely scaring markets. The dollar index actually lower here. And what we see in response to this is TLT actually rising here today. So take a look at TLT. I have a long position bouncing back here from the dead. My position went negative yesterday and now popping back here a little bit. So, you know, maybe a little bit of positive momentum is still in this chart, but you can see we're kind of losing that momentum here recently. So we'll watch TLT, but the point here is yields are bouncing. They jumped higher yesterday on the CPI and now cooling off here a little bit. So one thing that I think is worth mentioning is that if yields do rip through those highs, that does present a problem for equities off of an inflation concern, but we may also be seeing a little bit of growth concerns with all the tariff stuff and some of the weaker than forecasted numbers coming out on our inflation or on our growth metrics. Possibly the 10-year is not going to go too far from where it currently sits. Maybe it will stay elevated on inflation, but not go too far high due to less growth. And where that leaves stocks here for the index traders out there, we're still just kind of chopping around. We have not made a decisive break in either direction. In fact, in the last week, we've really been in a pretty tight range. If we actually take a look at the 4-hour chart, you can see here that the range here is pretty tight on this one. So you've got in the last several days, you had the big gap down, and then we recaptured that area, but we have not really made substantial progress from there in either direction. We haven't seen the big breakout. We haven't seen the big fallout. We're just kind of chopping back and forth. Part of the reason for this, I would say, is that U.S. company earnings are still very strong overall and pretty across the board, pretty good numbers coming out of the earnings season that we just kind of have been seeing. But you've got tariffs and inflation to worry about as well. So the market is just kind of trying to figure it out. We've had this very soft kind of lower high pattern going on, but bulls have also been buying dips pretty aggressively. So we're just kind of stuck in the middle. I wouldn't say I'm bullish or bearish on indices, just very decidedly neutral. Gold, however, continues to press the issue. A nice push here back towards those highs, and we're not too far off from yet again another all-time high around 2940. I actually made the point in the beginning of this year thinking that end of year target for gold could be 3,000. I may need to revise that pretty quick because this thing is just shooting in one direction to the upside here recently, and I don't really see a strong reason for this to stop. In fact, given the environment that we just talked about on the economic heat map and the edge finder sniffing out the same stuff, we see gold and silver getting bullish readings still. Until that changes, I'm going to be a dip buyer with good risk management and looking to follow the trend there. Crypto is getting hit hard here recently because, again, I just talked about that stagflation risk coming into the market. That is not a good environment for Bitcoin. Bitcoin, of all the environments that we would want to see, would favor Goldilocks, where inflation is cooling and growth is strong. People are getting, basically they're getting jobs. The economy looks solid, but inflation is kept at bay. That type of environment is good for Bitcoin, but a stagflation environment, very much not so. So I think the market is sniffing that out a little bit here. Bitcoin down 2% here recently, and from the highs, we're now seeing a pullback of about 12.25%. I would not be surprised at all if we do see Bitcoin go to test these lows around 16.5%. I'm not bearish on Bitcoin, but I'm also not bullish. Again, decidedly neutral according to the top setups page. We don't see Bitcoin on here, so I just don't have any trades on it. Speaking of the Edgefinder's top setups page, we do still see more yen strength overall expected. And if we take a look at a couple of them, we can see how that's holding up. Euro yen is slightly lower here today. Pound yen, CAD yen, pretty much everything lower against the Japanese yen here today, except for Swiss franc, and Kiwi yen also a little bit lower. And then finally, dollar yen, likely lower today with the dollar weakness that we're seeing. Today's video is sponsored by DNA Funded. If you're not already a funded trader and looking to become one in 2025, check out DNA Funded. They may be a great option for you, especially if you're a swing trader. This prop firm has 800 plus assets in one singular prop firm. You can pretty much trade anything you want there, and you can get profit sharing up to 90% with DNA Funded. So check them out down below in the description. Make sure to use our promo code A1T10 if you decide they are the right fit for you. I've been saying it a lot recently on the streams and videos, but knowing which environment that you're in is very, very important, especially if you're going to be a swing trader who trades a fundamental basis. You've got to understand what type of environment you're in. I had a conversation on today's live stream with Miko and Marco that might be very relevant to that, about understanding which environment that you're in. Marco actually asked me a question about, what kind of environment we potentially are in. So check this out.
So what's your fundamental play on silver? I get the technical one, but what's your fundamental? Is it edge finder? And
yes.
Okay, cool.
So it's getting a bullish reading, but that doesn't mean a whole lot unless you kind of understand the core. So this is, I'll just keep it really simple because I don't want to take up too much time. I know we got to keep going through charts. Really simple. A lot of our economic growth figures like PMIs are missing expectations. Growth. Now there's still good growth in the US economy. Now, of course, the U.S. economy is like the bulk of the world's, it's centric to the whole world. So we could look also at UK and look at Europe, and that it would be worthwhile doing. In fact, if we did that, these are also showing a lot of red. But my point here is that we're seeing cooling in the growth departments compared to forecasts. That makes stocks look a little less attractive, crypto a little less attractive if you're getting less growth, because then people start looking for alternatives and safe havens like gold and silver. So, I think it offers an alternative to traditional stocks, which, we've been talking about this together, keeping it technical focused for a second. We've talked about how, for a while we've had stocks just hitting every single, week, it seems like, new all-time highs. And I'm not a bear on that, but at some point we know, like, okay, Maybe to Miko's point about silver, maybe there's a catch-up trade here. Maybe metals as a whole have a catch-up couple of years. These trends can take place over years. We're talking about, like, when we talk about daily charts and 4-hour charts. We could be talking about years of metals having a run and taking a turn over indices. So right now, I don't predict that kind of stuff. I just look at what we're looking at. We're getting cooling economic data, inflation that's not going away. I like metals in that environment. So understanding the environment is really, really important for me as a fundamentalist. But from even a technical traders like you guys who focus very heavily on that, we can kind of see some of that. Metals are breaking out. Meanwhile, look at NASDAQ. There's not the same kind of clear-cut moves in this. Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things, all of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.